Good evening, all. Ira Epstein of Linn Associates with your metal market wrap-up, and I'm early tonight. It is just after 5 p.m. on this Thursday, and we are July 8th, 2021. So in the metals, I think gold was a terrible failure today. It got up to the 1815 area. It had so much going for it. If you think about it, you were down at one point in the Dow 500 points. You were down hard in the other stock indices, and it just couldn't hold its gain. And it even had the big break happening in real interest rates. You were up nice and sharp. You're getting a little correction tonight here. On the energy market, the market's still not seeing anything out of OPEC, and that's giving the market a reason to have a bid until they decide either they get a deal, which I think will happen, and if there is no deal and it goes into a free-for-all, you can drop from these prices $25 like that, nothing. So that's what you got to deal with. Dollar got a little stronger, and dollar weakened, and with that causing some strength in the other currencies. Tongue-tied there. In the weekly area chart of closes, we're fighting that battle, as you can see at this 18-week moving average of closes. It's very, very clear right here at 1796.30. When I come to the daily chart, this is what I didn't like, an outside day down. Now you can reverse that in a big way by taking out today's high. If that is done, by the way, and that high was 1819 and a half. So if you were to take that out, then you could capture the shorts here. That would be interesting. But until that's done, here's what I hated. I hated the fact that now you got a higher high and a lower low. Yes, the low today took out this previous low. So you've stepped out of any uptrend that you had. Where's the battle happening in terms of moving averages? Need I tell you? Right here at that key moving average, the 100 and the 18-day average of close. The 100 is 1791.70. The 18 is 1790.90. And we had a bearish crossover. And by that I mean you can see the red number with the green where you got under it at this point in time. Now that's intraday because we've just opened the evening session. Will it kiss it and turn back up, or is it more important that it broke down? The fact that prices are over it as that occurred nullifies its importance so far. Let's assume you rally from here. Then I'd look for the 1838 level. Get under this let's call it 1793 area to just be safe, and especially close under it. Market's going to look real bad on the downside. Could be arguing again for 1738, but that hasn't happened. So until that happens, and unless it happens, the support showing up at the combination of the 100-day average and the 18 is what the market's looking at. But I view today as a day that was a waste. It had it going. You got up to the 1819 level, and here you are at 1803, and you've wasted a lot of power. And the market, if you get much more of an up, it's going to be an overbought condition. Shucks for the bulls. The gold-silver ratio fought a battle that it's losing against the 18-day average. The higher the market goes, that means gold is stronger than silver. You need more ounces of silver to get an ounce of gold. Silver is doing something similar, though, in the bigger scope. It had gone up to challenge the 100-day average and the 18 and fell right back to the 200-day average, and it's holding it. Is the market trending? No, not up or down. You have a higher high, lower low, an oversold market that's just working itself, present tense, working it out of being oversold. It still has a reading under 30 in the D line, which is the blue line. I wouldn't touch it on the bear side or the bull side. In the copper market, battleground, 18-day average of closes, and the 100-day. It's both numbers. This market's looking for what it can do. Trend up, bias down as the market's staying under the 18-day average, and momentum flat. In the platinum market, you have a higher high, a lower low, bias down, momentum sideways. Really nothing there. And as I thought it would run out of momentum up here and not make it to the Bollinger Band. I said that to you yesterday. And it looks like that is just what's happening as the market's pulling back. You haven't lost your bullishness, but you're now overbought and not embedded. So in order to get me excited, you got to embed, and that will take a minimum of 3 days, including tomorrow, Friday. So maybe by Tuesday you could do that. Then I'll have a whole different tune. Until then, I think that the pros stepped away from the market. Now in the dollar index, you fell. And when you fell, you lost the embedded reading. You'd have to get it back tomorrow right away. Actually, it's tonight when the market opens, and it's not open yet, in order for me to say, okay, it's just a pullback and the market's going to be strong again. If that's not the case, then you can look for the euro to rally a bit and this market to pull back to work off an overbought condition. It's still in a longer-term uptrend, but when you lose that momentum, often price and the 18-day average want to make a run at each other. You know, if you're like me, I read newsletters, I read what other people write. If you think I don't, you'd be sadly mistaken. I have a group of people I respect, and when I'm questioning, gee, I have this trade, what are they thinking? That's where I go. And obviously the people I'm looking at are not fundamentalists, they're chartists, okay? I don't share with who I do that with, but I know where I'm looking and where I'm headed all the time. I might be that person for you. Let's assume you get a trade idea. You're going, okay, this is what I'm seeing on the charts, or fundamentally I want to be a buyer of this market. What is somebody with market timing going to help me with? What do they see? Well, my subscription does all that. Each morning I start you off with my video that starts off at 5:40 in the morning, and I'm going to cover all these markets for you. There's over 40 charts. I'm going to let you in see what I'm seeing on both a daily and then on the weekends, the weekly basis. And sometimes during the week, I even mix it together because I know some of you want the longer term charts, some of you want the shorter term charts. I'll do it both ways that you want it, and that's the goal of this. As a chartist, I'm concerned with what the market looks like. Where's the, if you will, the better patterns, the higher probability patterns. Nobody walks on water. You're going to see losses, you're going to see winners. That doesn't mean that the service doesn't do what you want. It does, I think, what you want because we keep growing and people like what they're seeing here. Give it a try. It's a 20-minute video, 6 days a week. That gives you more than you're wanting. To see it, you saw those categories, there'll be a bar on our website, you just drag it. So let's assume you want to go to the energies, just pull it across. They'll all light up and then let go when you hit energies, you're in the energy sector. You can watch this on your smart app because we give you an app that's included in this for free. That's a $45 value. You see what I'm doing? And a lot of traders not only take this, they want my full research because then I'm writing what I am seeing from a charting point of view, fundamental point of view, and I'll take you all over the spectrum of the commodity board. Today I'm writing about, to give you an idea, what happens, just what happens if all of a sudden the government spending ends, people aren't grabbing as many jobs as the government thought, and in the fall, September's there, you start the flu season in October and November, and these people that did not get the vaccine start flooding the hospitals. What will that mean? So I bring that all up today, and I bring you different ideas like that from time to time. Again, go to the website under the word research, or you can call my staff. They'll have you signed up like that. I'm Ira. Thanks for watching.